The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Tom's out this morning. He'll be back doing his program live this afternoon at 3 o'clock. Jumping into the action so far, we get some negative action across the board. Russell, the only index currently in the positive, but giving back some of those gains right now as the Russell was as high as about 2260 at 8 a.m. this morning. We're about 22 points or a full percent off where we were early this morning. We're currently positive 7 points still in the Russell at 2238. The only major index currently in the green. You get the Dow off about 88 points so far right now, trading at 31,402. Tech stocks pulling back yet again, kind of mimicking where we were yesterday. 12,981 in the NASDAQ 100. We're off about 1.5%. And you see, we're kind of right where we came into the opening bell yesterday in the NASDAQ 100. You got the S&P right now off about 15 points, trading at 3862. Commodity-wise, jumping around, we got crude higher by the tune of about $1.25, climbing right near the highs we had basically early yesterday, a high print of $63 on the dot. You got crude up $1.23, trading at $62.91. We got gold pulling back $20 at $17.86 right now. And how about notes and bonds? Talk about some lower price and higher yield. You got the 10-year right now down 15 ticks at 133.27. That's correlating to a yield in the 10-year of 1.42%. You got the 30-year off a full point in 13 ticks. That's correlating to a yield in the 30-year of 2.27 ticks. You get the 10-year up 5 basis points. You got the 30-year up almost 8 basis points. This all while you have Chairman Powell yet again in front of Congress. He's in front of the House Financial Services Committee. Yesterday, quite a star he was. Today he's in front of the House Financial Services Committee going on right now. Yesterday, he was in front of the Senate. Some strong words talking about inflation. Not even remotely on his radar yet. The term was soft in a big way. They're going to stay in there buying bonds. The market loved that idea. We accelerated, folks. You're talking about an acceleration yesterday. We traded down basically 90 points in the S&P from the pre-market highs to the intraday lows just prior to Chairman Powell's remarks being released. We climbed right back up to that level. Interesting action when you consider we were right where we were yesterday at about 8 in the morning at a high this morning of 38.9650. We've now given up 40 S&P points. We're making intraday lows as we speak at 38.56. No pun intended. Speaking of lows out with their earnings. Man, to be in the business of Lowe's and Home Depot, you can't deliver better numbers than these companies put up, folks. Lowe's is trading down 3.6% right now, jumping over to their news in terms of the action. Lowe's, how about same-store sales up 28.1%? Market was looking for 22%. In terms of the raw numbers, they make $1.33 versus $1.21. They take in $20.31 billion versus $19.48. They had net income for the quarter of almost $1 billion, up from about $509 million a year earlier. But the key here, Lowe's reiterated its prior forecast. Now, Home Depot didn't even have a forecast for their fiscal year. Lowe's at least reiterating the prior forecast, which says spending on do-it-yourself projects and home improvement could ease as consumers resume normal activities post-pandemic. Interesting action nonetheless. Let's jump over to our man Kevin Hinks, talk about some interesting action. Earnings season, we got volatility all over the place. We got the VIX right now approaching 25. Right after this program, folks, Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the markets, breaking down hypothetical trades. Kevin Hinks, good morning.
Good morning, Tommy. Yeah, all those good positive things you said about Lowe's, and the stock is down 3.6%. And so today we'll look at that third member and newest member of that sector, which is Wayfair, and how they're growing during this environment. So another good story in that home improvement retailer, except Wayfair's online. So that's their disruption of that sector. So we'll look at Wayfair and how they've switched from growing to profitability over the last 2 quarters, and we'll see how they're doing now as the sales are expected to grow as much as 50%. So big numbers out of Wayfair. We'll also look at Teladoc, the ability to go online and see a doctor. And then, of course, like Folio, we'll do a presentation on today's feature stock, which is NVIDIA.
Nice. NVIDIA. I mean, all of these stocks, man, the run some of these equities have had. I was going to jump to Wayfair first, $21.70. You made a high of $369 on January 11th. You backed off to $255. Was that the daily? Yes. Yeah, $21.70 at the March lows, $369, the high made January 14th. We've backed off. You could call it maybe a consolidation, really going all the way back to like late July, chopping around between about 250-ish and 350-ish. They better have some strong numbers, Kevin. When you trade from $21 up to $369, we're kind of seeing some of that action even in lows. I mean, you look where we were at lows. Lows got a low print of $60, and you traded up to $180 in October. We were back right near that level in February, back to 162, and NVIDIA as well, man. I mean, this thing, 180, the low in March, up to 614.90. Now, we backed off a bit. NVIDIA pulling back with some of the tech stocks, even in the last few days, to 553. But the chip sector in a big way. And let's see what we have in terms of NVIDIA. So, Kevin, are they out with their numbers right now? Are they coming out with them later?
They will come out. NVIDIA comes out after the bell today.
Perfect. So jumping over to the Analyze tab on NVIDIA, the fundamentals, they're talking about a little bit of volatility in there, $32.53. Kevin, we've talked about it before, but we got a bunch of new listeners, a bunch of new traders in the market right now. The Thinkorswim platform, one of my favorite features, the one-day expected move. We got it up here in NVIDIA, the Analyze tab, $32.46. Could you talk to the listeners just real briefly about how that's calculated? Because implied volatility in options, we know one of the most crucial factors when you're trading options. And I love this element of the Thinkorswim platform. Could you just kind of go over how that's calculated for the listeners out there?
Sure. That on the Thinkorswim platform, right in the middle, in the top, the third from the top line, you get a bright yellow number that appears you don't call it up, it appears by itself when the implied volatility of the first expiration moves higher than the implied volatility of the second expiration. That's when you get a market maker move that appears, because that implies that there's some event happening during that period. And so NVIDIA's move, as you said, about $32.50, that is a measurement of the at-the-money straddle and the first out-of-the-money straddle, and there's a algorithm or a thing that looks at that and calculates that number that it comes out with. So that is the expected one-day move. If you look in the right column on the Thinkorswim platform, the move for the week is $37, but the one-day expected move for NVIDIA is $32.50. So that's just a measurement of implied volatility and what it means for an expected one-day move.
It's so cool, man. Folks, if you haven't checked out the Thinkorswim platform, hit the banner on the front page of TFNN, download a demo account, follow along. Implied volatility, one of the most crucial aspects of options, as we know. Kevin, we appreciate the education, man. We look forward to the program in 45 minutes.
Have a great day, Tommy.
You too, man. Stay tuned, folks. We'll be right back.
Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got the market slightly in the red right now. We got the S&P's off about 9 points, trading at 38.68. We got the NASDAQ 100 pulling back yet again. A little bit of an acceleration to the downside right now. We got the NASDAQ 100 trading down to 13,026. We were up at 13,300. Pretty interesting that you made it basically right back to where you were before the acceleration began yesterday, and quite the acceleration in a big way, folks. I mean, you almost can't overstate the run that we had to the downside here. You traded from 13,300, you traded down 550 points in the NASDAQ 100 to 12,757. We'll talk about a first acceleration to 11. We pull back to a low of 12,885, and we finished the day yesterday in the tech stocks at about 13,257. We've given off about 200 points from those levels right now. NASDAQ 100 down about 1.2%. All right, jumping around to what we have going on in the market. One of the biggest stories out there, of course, COVID, the vaccinations. This economy is not going to get going back to where we need to be until we get vaccinated and get over this hump. Good news here, all but expected, but still good news that it's coming to reality. Johnson & Johnson COVID vaccine found effective by the FDA before the panel meets. This would be the third vaccine to seek U.S. emergency use clearance after, of course, Moderna and Pfizer. External FDA advisors to meet Friday and consider the recommendation. That's all but expected to pass. Vaccine 72% effective in the U.S.-based trial arm of its global study of more than 43,000 participants. The FDA staff wrote in documents that summarized the company's results and confirmed findings that J&J released earlier this month. So we kind of had this results. You have a panel meeting that will assess those results. They've now confirmed those results. Now you have the panel meeting on Friday to approve that vaccination for emergency use in the U.S. I mean, they're talking about in the den today, that, and I completely agree, that the market right now is focused on when we're getting to herd immunity, and that we're kind of coming at a pretty surreal level of reality setting in that this is on the forefront. You get into the numbers that we're at here, you're talking about 65 million doses given in the U.S., all right? Now, I'm not worldwide, we're talking about 213 million shots, okay? And that's a big factor because you want the world economy rocking, all right? But we want the U.S. rocking on the forefront. That's where most of our listeners are right now, the U.S. economy, all right? So I'm just talking about that economy right now. 65 million doses. Now, we saw a little bit of an ebb in terms of the doses over the last week. We had some disruptions with some of the weather going on in a big way, but you're still talking about almost 1.3 million doses a day. You just had the Biden administration come out and say the states are going to be now receiving 14.5 million doses a week. I mean, that's just at 14.5 million doses a week. You go 4 weeks, that's an additional 60 million doses that you're talking about in the next 4 weeks. Quite a number in a big way when you look at where we may be. That's the Johnson & Johnson as well. Here we go. This is a further update talking about a Bloomberg article saying the U.S. will now have enough vaccine for 130 million people by the end of March. And walking you through the math, right now we're at 65 million, right? We're pushing about 15 million vaccines a week. You push that out to 4 weeks, you're talking about an additional 60 million. By the end of March, you're talking about 130 million vaccines pushed out. That number is just going to keep increasing. I've talked about it on my program. It's going to ramp up in April. It's going to ramp up in June, July. By the summer, they estimate we could be at a level of 4.5 million doses a day. If we're at almost 5 million doses a day, we could be pushing 50 million vaccines every 10 days. That means we're there, folks. That means we're there, okay? Now, you're seeing the reaction in the stocks that need it most, right? We saw quite a reaction yesterday in some of the airline stocks. We had some of them pushing out even secondary offerings. Can't blame them at the acceleration you got. American up 3% today, continuing the run. Delta up another 3% today, right? NCLH, Norwegian, some of the cruise lines up 5.7% today. Carnival up 3% today. You're seeing this in a big way, folks. And even Disney up 1.3% today. One of my favorites, talked about it many times, new all-time high, $200.35 for Disney. Comcast, down 0.6%, I guess. Comcast could be one of the benefits as well. They have parks in a big way. Talking to friends who are not in the market, what I say is the market is forward-looking. Okay, you go back to the acceleration we saw in terms of the negative action in the markets, in terms of COVID setting in. I'm going to back this up a 3-year weekly because you got to go back a little bit further than a year. The market started realizing what was going to happen. Our market did the week of February 17th. Folks, shutdowns really did not happen until the week of about March 10th, March 17th. Okay, look at where the market was by then. Okay, the market figured out, rightfully so, that this was going to be setting in. Brilliant minds in the market, so much money to be made, okay? The market figured out that max pain was coming for this economy on February 17th, even though most people in the U.S. did not realize that their lives were going to change in a manner that we had never experienced until about March, middle of March, I'll say. It varied by states, but in Florida, for us, it was about March 16th, 17th that things really set in. Schools got shut down. The shutdown began. I'm bringing it up because we're right on the forefront. You're seeing the acceleration right now happening in American Airlines. You're seeing it happen in the airlines. You're seeing it happen in cruises. It's encouraging stuff from a humanity perspective, which is most important. It's encouraging stuff from a market perspective as well, getting over this hump in a big way. Jumping around to what else we have going on. So thanks to those in the den pointing out, I mean, you almost forget we have so much going on right now. We get crude numbers at 10:30, inventory numbers. Be interesting to see how that market reacts. Crude, talk about some volatility to the upside. You put crude on a daily. We chopped around between about $35 and $42 all the way from basically June to the middle of November. And since then, it's been a rocket ship. We're up basically 50% in the price of crude since November 20th. If you take the run we had since November 1st, you're talking about basically almost a 100% return on the price of crude, and it doesn't look to be stopping right now, up to about $62.73. We got to talk about Bitcoin a bit. We'll put this thing back on a 15-minute to see the action. Bitcoin opened Sunday night at 57,790, down to 44,900. We were above 50,000 briefly this morning. Some news about Bitcoin talking about this morning. You have MicroStrategy. They buy more than $1 billion worth of Bitcoin to add to their massive holdings. You have Square buying $170 million worth of Bitcoin. I believe Square is allowing people to conduct transactions via Bitcoin. So I think that that's part of their strategy of having Bitcoins, but they expanded their October 2020 purchase of 4,709 Bitcoins. We all know the saga with Tesla. $1.5 billion they put into Bitcoin, almost exacerbating the volatility of Tesla from 802 on Friday to 619 on Tuesday. A lot being written about Elon Musk and his woes in terms of just the raw numbers of his wealth accelerating and decelerating as Tesla chops around. But you got Tesla up about 1.7% today at $710. All right, folks, stay tuned. We're going to come back with those oil numbers. We're going to check in on the lows numbers as well. We'll take a look at NVIDIA as we discussed with Kevin Hicks. They got their earnings after the bell. And coming up at 10:40, we're talking to Teddy Kegstad from Forex-Trading-Unlock.com. We're talking about Forex as well. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps climbing back towards flat territory. We're off just 1 point right now, trading at 38.76. Jumping over to crude right now. We get the inventory numbers. So crude inventory is rising 1.29 million barrels. The forecast, I'm breaking it down, I believe it was for a drop of 5.19 million barrels. Just trying to dig it out, if that is the case. Yeah, so the estimate was for a decline of about 5.19 million barrels. Looks like the top line number you're seeing is the crude inventories rise 1.28 million barrels. On the heels of that news, nothing can shake that crude market right now. 62.72, no real reaction in the market in crude so far. All right, checking back to what we have going on. We had a question in the Tiger's Den talking about that Analyze tab over on the Thinkorswim platform. So just so you understand it, and it's underneath the Analyze tab, you actually have tabs under the tabs. And maybe that's a little bit of the confusion because you either get into, and I'm going to pull up NVIDIA, as we were talking about. All right, now you can jump to whether it's the earnings. There's a lot of great stuff in here, folks, that you can really access as a retail trader, as a professional trader. I encourage you to check it out. Thinkorswim is a sponsor, so I know I'm biased, but if they weren't, I would use them anyway. Underneath the Analyze tab, where you get the one-day market maker expected move is either within the Fundamentals tab, it'll give it to you here. It'll also give it to you on the Earnings tab because obviously pertinent information for an earnings event. Pretty cool when you look at even just going under the Earnings tab, right, which we don't even discuss. They go back in terms of the historical performance, the implied volatility, the historical volatility, how the stock's reacting, and at the money straddle, how it's reacting, the actual earnings versus the Wall Street projection numbers that they're dealing with. You go back quarter by quarter, so you can get a quick glimpse of how they've performed quarter by quarter within their earnings numbers. And then when you're just talking about trades, adding trades, looking at the risk profile, one of the things that I love to do most is put things on a graph to make things as clear as possible when I'm making trades. For instance, we'll just go out. This is going to be a theoretical, right? Let's just say we have NVIDIA right now. We're trading at 558. We're down 1.3% with the market. All right, we got a volatility priced in of about $33. The expected move, if you go out all the way to Friday, you're talking about almost a $38 move for implied volatility on NVIDIA. And let's just say we want to buy a call spread. All right, let's say we think NVIDIA is going to accelerate higher. We're willing to pay the premium that is assigned to these options, and we're going to buy a call at, let's say, 570. Right now, what you're doing is here, and I'm going to give a quick lesson. All you have to do is hold the control key in the Thinkorswim platform to build multiple leg trades. So you buy the 570, okay, and then let's say that we're going to cap our profit, cap our ability at, let's say, the 580 or let's say 585. Let's say we give ourselves about a $30 pop in NVIDIA to the upside. We sell the call at the 585 level. That's going to cost us about $4.68. Okay. Now we have a $15 window that we are able to achieve value through that trade. So we're basically risking $4.68. The entire value we could achieve is $15. We'd have to offset the cost. Would have a max profit of about $10.32 in this trade if it achieves a move all the way through 585. Now you can break all that down pretty quickly in your head, okay, if you understand what's going on. But the quickest way when I'm dealing with these is I put up the risk profile. All right. Now, number one, you're dealing with implied volatility numbers of percentages, the likelihood that it's in these areas. We have a max loss anywhere below $570 represented by the blue line. Now, I usually focus on the blue line here if I'm building just a simple call spread or selling a call spread, this would be a call debit spread, right? Anywhere as of March 27th, these expire on February 26th. So this is the blue lines basically at expiration. What's your profit? What's your loss? Okay. The loss side, we're trading 10 contracts. I'm just going to drop it down to one contract for simplicity. You're putting up $488. Your max loss is $488. That max loss is achieved anywhere below 570. Of course it is, because we're the ones buying a call at 570. We get no value whatsoever if this thing stays below 570. Where's our max profit? Our max profit caps out at 585. There's your max profit at 585. And throughout that area of $15, we rise from a loss to a break even of about 575, give or take, right? It would be 574.80 exactly. You'd have to achieve the loss, the debit that you incurred at inception 574.80, and you have max profit up to the area of 585. I encourage you to check it out. I've been on other platforms. There's nothing simpler, especially if you're trading options, than the Thinkorswim platform. And of course, after this program every day, Fast Market, Kevin Hinks, Alex Coffey, the team, great program. Check it out. All right, what else we got going on? As I mentioned, checking out the action, we'll jump into Lowe's a little bit. And this is where you want to understand expectations, folks, because, boy, for retail traders in the market, can you imagine buying a call at the money in Lowe's and thinking that all they need to do is put up solid numbers? Folks, the market is forward-looking, okay? They don't really care that much about the last quarter. They care about the next quarter, and we're all getting a lesson in that as so much growth has been priced into some of these equities that have flourished in a big way during COVID. You have Lowe's putting up 28% same-store sales. They were only looking for 22. 28% same-store sales. Folks, I'm pretty sure a year ago that Lowe's was doing just fine. I've been in Lowe's, right? And they crushed it with almost 30%. I mean, they made $1 billion in the quarter versus making only $500 million the quarter prior. But you got to look at where they've been. And Lowe's has accelerated from 120 to start really COVID up to 180. So that's a 50% pop in their price. You were down to 60 at the Lowe's, and you're sitting at 163. They got their weight on them, though, because rightfully so, the next year might be a tough tough year for this sector in terms of, especially when you look at Lowe's, a little bit more retail, a little bit more do-it-yourself home improvement. You know, if you didn't do something over the last month at home yourself, over the last year at home yourself, are you really going to be focusing on, improving that second bedroom, maybe building a deck in the backyard over the next year? No, you're probably going to be traveling. You're probably going to be going out to restaurants, seeing your family. That's what I'm going to be doing. So interesting action when you look at some of these. Now, Square out with their numbers as well. Square down about 6.4%. But again, you just traded from $32 up to $283. You've given back some of those gains. Strong numbers for Square, but not quite living up to the expectations that Square had. And we'll finish it up, as we mentioned, NVIDIA. So they'll be out with their numbers. And again, you got to factor in the moves, folks. If you're buying or selling anything to do with this equity, you better understand that NVIDIA right now is pricing in, what is that, a 6 or 7% pop? I mean, when you build trades in here, you better understand that if you're paying volatility, you got to get a 6 to 7% pop if you're paying volatility in both directions. I mean, if you're just getting in there to add a simulated trade, we'll delete that. You're trading at 557. We'll scroll back down. I mean, you just buy a simple call. You even go like in the money, right? I mean, basically that's our price point, $550, $750. You need an $18 move to break even in NVIDIA if you're just buying a call at the money. If you're buying a call and selling a put, buying a call and buying a put, that's where you get the expected move of about $37, the implied volatility. Big volatility priced into this equity, but if it's had some big moves in a big way. Chip sector on fire. The stock's on fire. We'll see how they do. Stay tuned, folks. We're going to come back from the break. We're going to be talking Forex. Man, we got rates higher. We got Forex on fire. We're talking a heavy keg stat. Back after the break.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Jumping over to the dollar index right now. We got the dollar index, the Bloomberg dollar index, 90.32, up about 15 ticks right now. We got some action in the euro. We got some action in the pound, the Aussie dollar. Let's jump over to our man, Teddy Kegstad. Folks, if you haven't checked out Teddy's website, forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. Teddy Kegstad, good morning.
Wow, what a day it is to talk about the currencies, huh?
Man, what a time to be talking about currencies just in general, man. We've had some great interviews over the last couple of weeks, and yeah, we got some action today in a big way, man. Where do you want to start?
Well, I think we should start kind of where we left off with how the oil trade and the interest rate trade are really driving the currency pricing right now. Nice. So it's very evident with the Japanese yen. Like if you look at the U.S. dollar yen, it's right below making higher move highs again. Yesterday, it planted a higher move low on the daily chart. It's been a bull since the beginning of the year. You know, now when we were talking right at the end of the year, we had Brexit, and now we have post-Brexit. And we were talking about how divergence was definitely going to come into play as we turn the course of 2020 into 2021. So we've had all that confirmed now, and I think we really are starting to set our trends, because we all know that higher move highs and higher move lows is a bullish trend and the contrary for bearish trends. And all the currencies now are establishing those on the daily. So whereas we had the monthly and weekly trends that were very strong, basically being dollar bearish since last February, we've had a bounce. And I think you're really going to see that extreme difference come into play now since we talked last week, the 30-year Treasury bond is down another 3 handles already, So, and that's keeping, no matter what, that's going to help the dollar in the long run against most currencies, except for, remember, we're talking about this oil trade. So I think that you really need to, and your followers should look at this now in the sense of where bullishness and where bearishness really resides. And it's all oil and interest rate indicative. So that's why the pound right now, it made a really high spike to higher move highs. Every single day this thing is grinding higher. And even today, the dollar index is slightly higher, only because the pound has fallen off of that, But if you look at, if the dollar was so weak, the euro and other currencies should also be making highs versus the dollar. They're not. It's only the commodity-driven ones, like the U.S. dollar Canada. It's getting pounded. It just continues to fall down. Like when I do my videos, when I go over to Canada trade, all I do is tell people, unless you get a super valid buy signal into Canada, I mean, you really have to wait for a turn in oil and some other things. Like, this trend is not going away, and I don't think it's going to go away for the rest of the next 3 to 6 months either. So I think that you're going to see the Canada continue to rally versus the dollar. You're going to see the British pound continue to rally versus the dollar. But this impacts, and also Australian dollar and New Zealand dollar, But the other currencies, not so much. Now, the euro is coming into a lot of problems besides the socioeconomic dynamics of what's going on in the EU. Post-Brexit, remember, the UK doesn't have to fund the EU anymore, So in the euro, if you're looking at that, I always say the markets are the best indicator of the markets. And when you look at the euro versus a lot of currencies, it's starting to have divergence and weakness, Like the euro is starting to trade in a kind of a range. Now, if the dollar was a bear, okay, the euro should be making new highs. It should be trading up at 122, 123 right now. It's not doing that. Okay. Yeah. So, and I think that if you're a euro US dollar trader, use a lot of caution and get ready for a lot of choppy range trading moves, because I don't think you're going to see any real big bullishness in the euro unless you have a big rally in the 30-year treasury bond and a big break in the oil prices. That might help the euro a little bit, and maybe if you see the pound go down versus the euro, but that's not going down either. Like, if you look at the British pound, it's a raging bull against every currency out there. So, and the dollar index is a reflection of that, so like while we had this little bounce for upticking today, it's because of your broad-based currencies, like your smaller ones that are rallying. Like, you have like your peso, and you have the Turkish lira, and then you have other major weights like the yen and the Swiss that are rallying are falling against the dollar. That's what's propping up the index. So, and interestingly enough, and this is where I think you can really start to see the divergence in the dollar. You have to focus on this now. The U.S. dollar yen trade is in a rally mode, okay? The U.S. dollar Swiss is also in a rally mode. That made higher move highs today, okay? So now there's 3 flight to quality currencies for your trading zone. One is the Swiss franc, one is the Japanese yen, and one is the U.S. dollar. Well, we know the U.S. dollar is under pressure because of the pound and certain oil currencies, but with the Swiss, it's rallying. Now, is it going to be a major bull? I don't think so. But the fact that it's trending higher, that's restricting the euro, And then the fact that the U.S. dollar yen is also trending higher, a flight to quality. If those 2 flight to quality currencies are lesser than the dollar, that means we have flight to quality going on in the dollar, And especially because the bond market's collapsing. If the bond market's collapsing, where do you go? You have to go to the dollar. You know what I'm saying? So, except for if you're trading the pound. So I think for your followers out there that are watching and or to trade the currencies, they really need to be mindful of the oil trade and the interest rate trade and the trends that are going on right now, because the central banks aren't doing anything. I've never seen the bond market do what it's doing right now. You have no central bank action whatsoever. I mean, over the past few months, you've seen an erosion in the debt market, and the spreads. The spread between the short term and the long term is so stretched right now, and it still keeps falling. I was short. I got out. My targets were hit. I woke up this morning. I'm like, how is this thing down another basis handle? I'm like, I just missed out on another $1,000+ move in a day because I didn't think it's overdone. Long term, I'm a bear, but I was looking for a short term, at least choppy bounce. We're not getting that.
No, I mean, even the 2 years basically almost doing nothing today, right? You got the 5-year up 3 ticks in terms of yield. You got the 10-year up, just more than that, and you got the 30-year up almost 6 ticks. It was up almost 8 ticks, and like you said, man, you put that 30-year on a chart, and it's like, my goodness, man, you got. I mean, today's. Like you said, the moves have been pretty amazing in terms of lower price, higher yield. And today we just got a gap away that just, is decisive on this chart. And it's very difficult to be decisive on this chart when you just traded from 183 to 163, and just like that, boom, we're down at 158.30, the low in the 30-year today. It was it caught me off guard in a big way as well. I kind of woke up and said, whoa, man. They were talking about it on Bloomberg super early this morning. I said, man, this move is pretty remarkable. And I thought of you in a big way, of course, and then oil. It just continues, man. We got inventory numbers today, and we just saw crude with a 63 handle still, even with crude inventory showing a build of 1+ million barrels as opposed to
$100 oil is coming, my friend.
I love
it's
it,
getting
man.
Closer.
Teddy, we appreciate the education so much, man.
Thanks,
we look
guys.
forward to talking to you next week.
You too. Take care.
Thanks, man. Stay tuned, folks. We'll come back after the break, finish up the show. S&P's right now positive by 0.5 point. Be right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps back in the positive by 1 point right now, trading at 38.79. We got so much going on in the market right now, right? We got earnings season going on. We have Chairman Powell in front of the House today. He was in front of the Senate yesterday. We have the stimulus deal going through Congress right now. And what else do we have going on, folks? We got a man, Basil Chapman, 6 days from right now. He'll be doing a webinar for subscribers, a 90-minute webinar Basil does such a great job in these webinars, folks. If you haven't attended a Basil Chapman webinar yet, I encourage you to sign up for the opening call. It comes with a 30-day money-back guarantee. You gain access to his newsletter. He put out a great video last weekend just for subscribers. He puts out updates every morning at least, okay? He usually has an update Saturdays, maybe even on Sundays as well. And, of course, all subscribers gain access to the webinar taking place next Tuesday night. What impact will the tremendous increase in the public's participation in the stock market these past few months have in 2021? He's got a number of points that he'll be talking about. And what you also gain access to, folks, is the full spectrum of archive webinars that Basil has had. I mean, you go back, whether it's July, talking about the chart formations that have worked, whether it's going back to May, the technical tools that have produced strong gains in 2020, you gain access to all of these archived webinars from Basil. When you gain access to that, you get 30 days. If you're unsatisfied with it, folks, it comes with a 30-day money-back guarantee. This is the subscriber area for the archive webinars for the opening call. That's what you gain access to as well, on top of the newsletter and the webinar coming up next Tuesday. I encourage you to check it out. And that webinar taking place on Tuesday night, that will be archived as well if you cannot attend live. Boy, watch out for this market, folks. You talk about an acceleration. We're now trading at 38.85. Since I came on the air, we're up a solid 30 S&P points. The highs might be the next stop. The highs at 750 this morning, 38.96. Stay tuned, folks. Fast Markets next. Basil Chapman coming up live at noon. Steve Rhodes, Dave White, Tom O'Brien, my dad live at 3. Thanks, folks.